Regional New York bank craters, is the Canary in the Fed's QT ending coal mine? Premium. The price of shares in New York Community Bancorp, the regional bank that purchased deposits from Signature Bank last year, are crashing this morning, below SVB crisis lows, after reporting a surprise loss for the fourth quarter and a cut to its dividend. As Bloomberg reports, the bank lowered its quarterly payout to shareholders to 5 cents. Analysts had predicted the dividend would remain at 17 cents. A worsening credit outlook contributed to the unexpected loss, as the company boosted its loan loss provision more than expected. We recognize the importance and impact of the dividend reduction on all of our stockholders, and it was not made lightly, Chief Executive Officer Thomas Kangemi said in a statement Wednesday. While these necessary actions negatively impacted our fourth quarter results, we are confident they better align our larger organization with our new peers and provide a solid foundation going forward. The loss for the final 3 months of last year was $252 million, compared with a $206 million profit analysts had predicted. Revenue of $886 million fell short of expectations for almost $932 million. But the scale of the losses obviously shocked investors who believed the Fed, the Treasury, and everyone else that SVB was a unique event and the Fed had solved that problem. Management had previously said asset quality was strong, so something has clearly changed in their tone, John Arfstrom, an analyst at RBC Capital Markets, said in a note to clients. This was a material negative surprise. This should not come as a surprise to zero-hedge readers, as we have been warning for months in the face of regional bank share optimism that all is very much not well beneath the surface of their balance sheets, here, and most extensively here, as the imminent end to the Fed's bank bailout fund means regional banks will have to find a different way to shore up their balance sheets. We have warned endlessly that, without the bailout fund, regional banks are already in crisis, red line, and large bank cash needs a home, green line, like picking up a small bank from the FDIC? And it got worse since then. All of which leaves us wondering, did the Ides of March come early? No wonder then, as we noted previously, that Logan, the only actual trader at the Fed, started to panic in early Jan and gave the market a green light to start pricing in the end of QT. And, when push comes to shove and we get a little market turmoil in the weeks that follow as the market realizes that QT is still taking place too fast and too many reserves are being drained relative to how much liquidity was being injected previously via reverse repo, the start of the next QE. What happens then? Well, we all know the endgame, but here is a quick preview again thanks to Blitz. This will add more liquidity to the markets by virtue of the Fed returning to roll 100% of its holdings. They may choose to continue to run down MBS, a promise they always seem to make to themselves, but break. The economy and inflation will inform them on whether to take that course, too soon to say. In the end, if we are sitting in summer with a growing economy and rising private credit demands that have helped turn the curve positive, the Fed will recognize, to the extent it does not already, that where they set IOR is their most critical policy choice. More importantly, however, by then it will become all too clear that had the Fed not capitulated, Biden would have no chance of re-election. Which, incidentally, is precisely why the Fed is going down this path, because the last thing the political Fed wants is a market crisis and/or recession months ahead of the date when Trump may get re-elected, something Bill Dudley actively and shockingly lobbied the Fed against, and Trader Jerome is there to make sure all goes according plan. And that's where we are now. All eyes on the SOFR spread for signals of stress in the plumbing, and in case you wondered why treasuries and gold are so aggressively bid, and rate cut odds jumping, now you know. Flight to safety anyone?